Okay, what an exciting strategy this is. So the trend line strategy is very, very exciting. You have learned now, so this is like the second strategy that you have learned after the pin bar strategy, and the last one is going to be the bank trader strategy, which we're going to go through into the next lesson right now, which is obviously our last lesson. But right now, this is a summary of what you have learned about the trend line strategy, and these are the key things that you need to understand. So try this strategy on a demo first. Try it for at least 3 to 6 months and see what kind of results you are achieving. This will help to build up your confidence and be able to understand what is really going on. Okay, so make use of multiple time frame analysis. So top-down analysis. Analyze your chart from the monthly time frame down to the H1 and know where the opposing trend lines are. So this will give you an overall good picture of what is happening over the whole market structure as well as on the smaller time frames, right? So have a good understanding of trends and when a new trend starts, and stay in a trade as long as the trend lasts, right? So as long as the trend is in your direction, make sure that you hold in on the trade. Remember to keep your profits running so that you can make the most out of the market and cut your losses short. So you can always use a trailing stop to make big money. That way you can always ride the trend all the way to the highest points, right? And that will also take out a lot of emotions out of that trade, because you know you have secured some of the profits and you're still trailing, right? You're just going up with the market following behind it and securing yourself a lot of profits. So when you're in a trade, pay close attention to opposing trend lines and horizontal support and resistance levels as well. So these are very key. These are the points where we want to exit our trades or start to take new trades, right, in the opposite directions. Long and medium term trends have more significance than short term trend lines, as we have shown you. Do not set take profit targets. Use trailing stop to lock more profits as a trade goes your way. That way you maximize your profits, right? So take profits, not something that we recommend that you make use of. We actually recommend that you use trailing stop to lock more profits as the trade goes your way, because there might be breakouts on those profit targets that you have set up and the market continue going in a direction for a very, very long time, and you will have missed out on that trade, and trying to get in again when you see that it's continuing might be too risky for you because of, you know, reversals and all that stuff. And then another key thing to make the most out of a trend when you catch one is to add on more trades. So take multiple trades on a trendy move by adding on more positions, right? Apply the 7 powerful reversal candlesticks as further confirmations, which we're gonna go down just below. We're gonna take a look at those right now, but pay attention to the close of the H1 and H4 candlesticks. If they close above or below the trend line, that way there'll be a confirmation of either a new start of a trend line or a breakout, right, or continuation at least. So for entry confirmations, make use of these 7 reversal candlesticks so that you can, before actually placing your order. It is very important to have the odds on your side before getting in a trade, and there is no better indicator than the price itself. So the 7 reversal candlesticks, those are the best price action confirmations. Focus on taking trades based on the H1 and 4-hour time frames. They are much more reliable than taking trades in much smaller time frames. So remember, they also cover up good trades in smaller time frames, so rather be flexible towards all these time frames from one time frame to another. So never trades based on just one specific time frames. Consistency is very key to break through in forex trading, so use proper risk management, follow the trading strategy and follow your trading plan. You can't afford to mess up. The trendline strategy is not really about getting 5 to 10 pips profits per trade unless you are scalping. So we are getting in on trades that last for hours, days or even weeks. So we will be targeting big profits, and big profits don't happen on 5 minutes or 1 minute time frame. They happen over many hours and days with big trendy moves. So the trendline trading strategy is all about capturing those big moves by staying in long trades. Go over your charts and draw trend lines using past price data and see how price has responded to those trend lines. This allows you to test your skill in drawing trend lines. So open up your charts and see what kind of reversal candlesticks you can spot and where the market has turned. So the 7 important reversal candlestick patterns that you need to understand are basically these ones that we have here, right here. So the second most powerful reversal candlestick patterns. Okay, so this is very important. So if you can, I don't know if you want to draw it down, capture it, take a screenshot so that you have, you know, somewhere where you can just take a look at it every single day. But this is very key. Here we have the bullish, meaning that the market is going up. this is a reversal pattern to show that our market is going up, right? So we're looking for buy setups after these ones. Here we're looking for sell setups with the bearish candlesticks, right? So firstly, we have the dojis. So we have the dojis. I told you before that the dojis actually comes in 4 variations. So we have this one here. This one is basically the same on both directions, but this one where we have this small line at the top, and here we have the small line at the bottom, right? So here we have the small line at the bottom. So this is more bearish and this is a bullish one. Also depends where it is also in the market, right? So this is more powerful found at the end of a downtrend, and this is more powerful found at the end of a uptrend, right? So it's a reversal pattern, so it should be at the end of a trend, right? It's very powerful when it's that way. And then secondly, we have our engulfing patterns. So this is the bullish, where this one covers this one fully. So this candlestick, small one, has been fully engulfed, as well as this one here. As you can see, this candlestick is the one that confirms the direction, and then here, as you can see, this one is the one that confirms our direction. So the bigger candle is the one that confirms our direction and should be the color of the direction that we want to trade. And then the third one, we have our piercing line and dark cloud. So piercing line in a bullish, what this means is that this candlestick will open below where this one closed, and then goes up, right, and close above at least the midpoint of this line. And then on the dark cloud is just opposite. This candle will open above the close of this candlestick, and it is bearish in a the last candle should be bearish in a bearish market. Here the last candle should be bullish in a bullish market. So this is what they are exactly. So as you can see, the piercing line and then the dark cloud. And then we have the haramis, very powerful as well. We have, which we call the mother candle and the baby candle. So it's a small candle inside of a big candle. So here we can see that the small candles are the ones that give us the direction when it comes to harami. So the small candle is the one that gives us the direction of the market, as well as that one, as you can see. And then we have this one, actually one of my favorite setups right here. As you can see, with the hammer and the shooting star. So the hammer at the bottom of a downtrend that was going down, and then when this forms, very powerful signal for you to go in on that buy setup. This one at the end of an uptrend, when you see this, very powerful to go in a downtrend, right? So very, very powerful to spot this. And remember, very key thing to remember is that the bodies, these tails right here, or the tails, the wicks must be at least 2 times longer or bigger than the heads, than the bodies of these hammers, right? It's very, very key to understand that. So in both directions, the wicks must be 2 times longer than the bodies, right? The size of those wicks must be at least 2 times longer than the body size. So very, very key. And then we have what we call spinning tops. So 2 small candles at the top. So as you can see, one is bearish, one is bullish. Doesn't really matter which what color the 2 are. They just must be small size and pretty much equal in size, right? They must be equal in size. And these are what we call the spinning tops. They're both found in the bullish and bearish market. Same name because they can be either color. It doesn't really matter. And then the last one but not least, we have what we call the railway track patterns. So this is what we also call the tweezer bottom and tweezer tops, right? So as you can see right here, it's exactly the same size. As you can see, it came down, and then the next candle, which shows the direction of the market, is exactly the same size as this, and actually closes a little bit either at the opening of this candle or at least above the opening of that candle, right? Same here in the bearish market. This candle will give us the direction of the candle of the market. As you can see, it opened at the close of this bullish candle and then closed around the opening, or at least below the opening of this candlestick. So this is our 7 very important and powerful reversal candlestick patterns that you need to get hold of. So as you can see right here, I'm just going to clear this so that you can see them very clearly one more time. But basically, these are the candlesticks that you need to understand and get a better understanding of. So very, very key, and I hope you guys actually understood everything in this section, because now we are going to the most powerful strategy that you can ever learn, which will make you a winner in this market, and that is called the bank trader strategy. So we're gonna go into that after this last section. So make sure that you go through everything and you understand these lessons, trying to be as detailed as much as possible and provide enough visual illustrations so that you can get a better understanding. But practice makes perfect, so make sure that you actually go to your chart and be able to spot this out in an actual chart, right? So this is sort of a blueprint that you can use to be able to spot these patterns and understand what they do and what they are for. So let's move on to our bank trader strategy lessons.